Today, I am pitching AcuityAds, which, as Michael said, I think there's some good reasons for why people are jumping in now. It's about a $300 million company, and let's get into it. So it's basically a programmatic demand-side platform, programmatic advertising demand-side platform, which means that it's part of this modern advertising move. Basically, whenever you go to a site or any sort of connected TV or anything like that, and you start to interact with the media, there's an auction held in a split second that decides which ads to present you. Information is sent about about who you are to the demand side platforms, and then advertisers bid on showing you an ad. So as you scroll through Forbes, for instance, ads will load and it looks like they're just loading, but there's an auction happening and those ads are being presented to you. AcuityAds has a new product that's called Illumin, where it basically lets marketers map out their consumer journey. So in this case, they've got their audience, they've got a couple of the different advertisements they want to show. Once they've seen that advertisement twice or they've clicked on it, then it goes to the next phase of the consumer journey. And so we've all had that experience of seeing the same ad over and over again, and you get tired of it eventually. This is trying to alleviate that problem and help marketers actually market the way that they're used to on more of a consumer journey, rather than just like the spreadsheets that are currently used in a lot of programmatic advertising. Another point here is that the Illumin growth is hidden within its more legacy business. So Illumin grew 42% quarter over quarter. This was its fourth quarter in existence, so it didn't have any sort of year over year numbers. And it's now 27% of revenue after only a year of being in existence. The entire business only grew 5% year over year, which is why investors are a little bit concerned. But if this Illumin growth continues, it should be very good for investors. Just a quick point here that the global programmatic advertising market is growing very quickly. I always take these numbers with a grain of salt, but a 12% estimated CAGR for the next 5 years gives us a sense that this market is growing very quickly. And then Acuity is also financially strong and growing stronger. It's been generating more free cash flow from its low back in 2020 of Q2, when the company was thinking about or potentially going to go bankrupt because advertising just went away almost completely. Its EBITDA margin has been growing. They focus on profitability. Cash has gone from $9 million to $100 million with a couple of equity offerings and also cash flow. And then debt has been reduced in half. And then finally, Acuity is at an extremely attractive valuation. With a reverse DCF using about a 12% growth rate, we can see that it's going to 5 to 10x in the next 10 years. It's at an 8% free cash flow yield right now. A third of its market cap is in cash. The market supports high multiples with the trade desk at 43 times sales, and Acuity is only at 6 times sales. And then finally, Acuity has this compelling combo of attributes where it's got hidden value, really strong and growing stronger financials, and a super attractive valuation at an 8% free cash flow yield. Thank you.
My goodness, and you finished with 8 seconds to go. I should be giving extra points for that.
Yeah, so I read somewhere that the company's trying to move all of its clients to Illumina. So I'm wondering how much of that growth is really from organic Illumina growth and not from just cross-selling, moving customers from the legacy app to there, because the whole business just grew 5%, and I'm worried that it's not enough a high growth rate, and you're just moving legacy customers to the new solution and not really growing the business overall.
So the number that they give is that 67% of Illumin's users are new logos. So completely new. They've been trying not to transition people this year. Next year, they'll start trying to transition more people onto the platform. And they've only been taking people who really want to right now to move over immediately. But they have been focusing on new growth and those things. So 67% new logos. And I'll make one more point too on this, that a lot of the reason for the kind of flat legacy or the flat revenue for the whole company is just based on some of the industries that they're in are travel and then some consumer goods that are dealing with supply chain issues. And so when they have supply chain issues, they don't have any reason to market. And so some of the traditional revenue kind of took a hit in the last couple of quarters.
What's the risk of takeover here?
I think there is a risk of takeover, but I would not say it's necessarily a risk. I think at, like I said, an 8% free cash flow yield, a third of the market cap in cash. If this was to be taken over, I think we'd get a fairly healthy premium. And like you were saying, Aisha, the management team for Acuity is committed to growing this into a big business. They don't see this as they even said this on the conference call. They don't see this as $100 or $200 million revenue business a year. They're trying to really change the way programmatic advertising works. And that to me sounds like a management team that's not interested in just a 20 or 30 or 40% premium on their current price.
So my question, I don't know the name. I was wondering what happened to the company that it dropped from 25 to 4 in price. Like what's the market pricing or what's wrong with it?
Yep. So there's kind of two parts here. So one is that it had launched this new product and really ran up from like about $1 to $25 over the past year. And then it got really close to the valuation gap between it and the industry leader, the Trade Desk, narrowed significantly. Then the Trade Desk had some fall off. And so then its multiple came down. And at the same time, Acuity, I think investors assumed that this thing was going to grow a lot faster than it was, and that their growth rates would be closer to what the Trade Desk was growing at, including its legacy business. Whereas it has become a little bit of a race between how fast can they grow their Illumin revenue versus how fast the rest of the revenue starts to deteriorate. And so I think looking at it, it's fairly clear that the Illumin revenue is going to grow, and you're going to start seeing those rates for the whole company that are closer to the Trade Desk. But currently, investors, I think, are seeing that top line revenue number and not too impressed with it.
The new product that Ian, you have been talking about, is how long this has been in the market, and what has been what are the data make you convince you that it will be able to take over the existing business?
Yep. So it's been in the market for a year. In the first quarter, it did about $1.5 million in revenue. In the second quarter, it did $3 million. Third quarter, it did about $5 million. And then this last quarter, it did about $7.5 million. And so it's been growing at a fairly good clip throughout that. And what they're saying is that they've got numerous examples of customers increasing their spend by about 3 or 4x from the first quarter to the third or the fourth quarter that it's been into existence. And so they're seeing a lot of traction with customer growth, or basically customers spending more dollars on the platform. And they're expecting next year to hit more of what they consider their tier 1 clients, which are Fortune 1000 companies that just have a longer sales cycle, that they haven't gotten involved, that haven't really started using it in a big way currently, but are planning to use it. Or they're hoping that they'll kind of close some of those longer sales cycle deals next year for like multi-million-dollar deals.
Cool. So it's about 12-15 million for the first year revenue. The client profile, most of them are existing clients from the legacy business, or they acquired new clients?
67% of the clients are new clients.
Are the sectors mostly travel? What did you say the primary sectors that they gain business from?
So they're gaining a lot of their business from kind of mid-market companies and direct to consumer. So one of their big clients is Purple Mattress. That really telling that consumer journey is good. They're also seeing a lot of traction with automotive companies who are looking, who want to get the awareness out about their trucks or their cars, and then kind of move consumers through the journey that way. And so things that are kind of visual products are something that's they're having a lot of traction with.
Cool, thanks.
Awesome.
Yep, thank you.